Okay, what is up, traders? What's up, tycoons? Super excited for today's video. Gonna give you guys an update on TLT. And as always, before we hop right into the TA and the technical analysis, there's some important data that I want to go over. And I'm gonna make a bold prediction, basically, that the market is about to drop and that it's going to catch a lot of people by surprise. We have tons of catalysts coming up. So put your seatbelt on. February is definitely going to be a roller coaster. We have huge earnings reporting this week alone, right? We have Apple, Amazon, we have Google, we have Meta platforms, right? Facebook. Then not only that, we also have the Fed meeting and Jerome's Powell's speech. So it's going to be a roller coaster for sure. Make sure to smash the like button and subscribe to the channel. If you want to get straight to the TA, just skip to the later half of this video and you can go ahead and, get the nice breakdown. So the first thing we're going to cover in our slideshow presentation, okay, is going to be the Fed funds rate versus the Treasury yields. Now, I did a pretty good job of highlighting why this is important in the last video, but if you take a look here, this is our Fed funds rate in blue right here, and we can see it's currently above the 2-year Treasury yield as well as the other ones, the 10-year bond yield and also the 30-year. But the one that's most important is when the Fed funds rate is higher than the 2-year Treasury yield. All right. A recession follows shortly after, within 7 to, like 14 months, you'll see a recession. So, a lot of people have saying that the Fed is going to be able to generate a soft landing and avoid a recession. The job market does look very strong. So, there is some indicators of that. But historically, this has been a very big indicator when the Fed funds rate is above the 2-year Treasury yield, that things can get very bad in the future. But we're not going to highlight too much on that. Okay, I did a bunch of charts on that in my last video. What we're going to look at right here is this is going to be the TLT versus the S&P 500 futures. Now, the reason that I have this highlighted is because we currently have a divergence, and there's been multiple times in the past where we've had a divergence. Okay, so we have the S&P 500 futures here in blue and TLT in red. And a divergence is when one of them is doing something different than the other. So take a look here at how the stock market was in a downtrend right here, while the TLT was actually in an uptrend. So we have a divergence right here. And look what happens. The stock market ends up following, and TLT was a leading indicator, which is why I originally started making these TLT videos, is because, TLT has been a leading indicator for the market as a whole. So, we see the market dropping, but we see TLT going up. And sure enough, the stock market ends up following. Now, look over here at what happens, right? We see that the stock market's rallying and the stock market's going up. Meanwhile, TLT is dropping. And sure enough, what happens is the stock market ends up dropping and TLT continues that trend. Over here, look at what we're currently doing, guys. The stock market has been rallying. Okay, the stock market's been going up, and TLT has been trending downwards, right? It's been pretty flat the past week or two, but it's still in a downtrend compared to the stock market being in an uptrend. And I have a good thesis on that. I think that we've been seeing some short squeezes. I also think that maybe not even huge short squeezes, okay, but I do think that some shorts have been covering in the stock market, as well as there's been some gamma squeezes going on related to the option chain market. We'll take a look at that at the end of the slide presentation. But this is a huge deal, okay? If what's been happening in the past is correct, and each time there's been a divergence, the market has ended up following TLT, and TLT was originally right. We could see a very similar pattern play out to what happened over here in the summer of 2022 when the markets continued to rally, but TLT was dumping. TLT is in a downtrend now, and the market is still going up higher. It's going to be really interesting to see what happens. I'm not saying that we have to dump anytime soon or that we will dump, but this is part of my thesis behind my bold prediction. Remember, none of this video is financial advice. This is all going to be pure data, right? And I'm just going over data, presenting some data to you guys, and telling you what I'm looking at and why I'm looking at it. The next chart is going to be TLT versus the Fed funds rate. So I just want people to, be able to visualize and understand visually how the Fed funds rate affects TLT in the bond market. So look at this period over here of all this free money, right? So we have free money. This is the Fed funds rate here in blue, and TLT in the bond market is just going up, right? So it's going up this entire time that we have free money. And look what happens here. As soon as the Fed funds rate starts going up, TLT starts going down, right? And then we see here the Fed funds rate drops, right? And they drop it all the way down to zero. And look at what happens. TLT starts to rally. And now here recently, okay, we've been seeing Fed fund rate go back up and we've been seeing TLT drop. But what's most important is that the bond market is calling the Fed bluff. Okay, if you take a look, the Fed funds rate is still increasing, but TLT is no longer dropping. It's actually bouncing, right? And the bond market as a whole has been starting to rise and yields have been starting to drop a little bit, which is why we see the 2-year treasury yield lower than the Fed's fund rate. So essentially, the market could be getting things very, very wrong, and we could be due for some more pain. Like each time over here that we basically just visualized when the Fed funds rate is very low or going down, you're going to see TLT going up. And when the Fed fund rate starts to go up, you see TLT go down. They're still going to increase the rates more, right? And they could be increasing them or holding them at elevated rates for longer than people are pricing in, right? A lot of people are trying to time the bottom and get in early before the bottom. And we're seeing what I like to call, the bond market calling the Fed bluff, So, clearly the Fed funds rate is still going up and the bond market has already started to rise. So is it going to be something similar where we have a little bit of a dead cat bounce here and then we end up dropping? That could be what's setting up here potentially, right? The next video or the next slide is going to be the Fed's fund rate versus financial conditions. Remember, Jerome Powell's goal is to tighten financial conditions. What this means is that you're going to see financial conditions start to rise. Financial conditions on this chart are going to be the red and orange lines, and then you're going to see the Fed funds rate here in blue. So, notice how when we have this period of free money, right, financial conditions are easing and they're going down. They're going down. That means they're getting looser. Okay, we start to tighten over here and we start to really increase the Fed funds rate, and then sure enough what happens is financial conditions start to tighten and they start to rise. Well, they've really been kind of just chopping really, and they haven't really gotten any tighter. They've actually started to go down, and if you take a look at where they previously peaked at, okay, that was all the way back here in the summer, okay, right around Jerome Powell's Jackson Hole speech, which really shook up the markets and sent the markets straight down, right? So he has the potential to do that again in this February meeting. If he really wants to come off super hawkish and he really wants to scare the market because the market's been rallying too much, then he could surprise everyone and rise the Fed funds rate by 50 basis points, which I don't think he'll do. I think he'll do 25. And if he's not happy with how financial conditions are still trending downwards as they've continued to really increase the Fed funds rate, he may try to spook the market, right, and come off hawkish in his speech. Now, this is all speculation. He may come out and be dovish, all right, and that's entirely possible. And he may suggest that they're going to start cutting rates soon, or at least pausing from the rates here soon. And if he does that, then most likely you're going to see TLT and the stock market rally. Now, this is it zoomed in, okay, just so you can visualize a little bit more what's going on. Like I said, financial conditions aren't really tightening that much. And look at how much we've really increased, right? So we initially had the big increase in financial conditions, right? And then, or in the Fed funds rate, and then financial conditions topped out right there. And they really started to chop and they're heading in a downwards direction as the Fed funds rate, has just increased so much since then. So remember, his goal by increasing the Fed funds rate is to tighten these financial conditions. And we're not really seeing them tighten. We're starting to see them chop out and loosen up a little bit, which is kind of scary. If you're Jerome Powell, you're saying, hey, well, this isn't really working. Maybe we need to keep up this hawkishness. The next one we're going to look at is the stock market versus financial conditions. Now, again, this really just helps to visualize for you guys. So each time we hit a bottom was right around a peak of financial conditions, right? We have a peak here, we get another bottom. They come down, and then this is Jerome Powell's famous Jackson Hole speech in the summer, okay? And sure enough, financial conditions do come up and tighten. The market makes a new low, but look at what they've done. We've increased the Fed fund rate by 275 basis points since this time, since the summer of 2022. And financial conditions really broke through this level that they previously were at, and they've really started to tank. Okay, so it's real interesting. Like, is he going to be pleased by this, or is this going to possibly cause him to come out a little more hawkish than people are expecting and really drive financial conditions tighter and bring that chart back up? If you take a look here, this is TLT versus financial conditions, performing very similar, right? Each time we're seeing a peak, and here you're seeing a new low, right? We come up here, we peak, make a new low, we come up here, we peak, we make a new low. And again, just like the other chart, financial conditions have broken through its previous level and are really just starting to drop. So is this going to cause TLT, if this starts to spike back up and potentially even make a new peak, is that going to cause TLT to come down here and make a new low on the chart? So just something to be aware of and kind of be, paying attention to these financial conditions. Now, this is going into essentially the whole gamma squeeze theory. If you take a look, we have the stock market here in purple, okay, the S&P 500, and then we have the 1 week 50 delta implied volatility. And now, the reason we're looking at this is because as implied volatility is spiking, okay, and going up, the white line is going up, you tend to see the stock market going down, right? And, this happens multiple times, right? Implied volatility is going up here, the stock market's going down, or I'm sorry, implied volatility is going down, stock market's going up, and then we see that the stock market goes down, implied volatility is rising. Currently, we have a divergence. And again, this divergence is on the 1 week 50 delta implied volatility. So we're seeing that the implied volatility was still rising and still heading upwards while the market is also heading in an upwards direction. So one of these have to break, right? Either the market has to drop here soon and this is going to continue rising, or this is about to drop and applied volatility is about to drop. And, this is going to continue going higher. The market's going to continue going higher. But with the big earnings week we have ahead of us, let alone the earnings month, and also Jerome Powell's Fed speech, I really think that implied volatility is going to continue to rise and you're going to see the market eventually drop. Now, again, that's all speculative, so not financial advice. All of these companies could come out and crush earnings. And, that's Amazon, that's Apple, that's Google, that's Meta. These are really, really big companies for the stock market. And Jerome Powell could come out super dovish. But, when you look at some of the data, I just don't see some of the data really supporting that he's going to come out so dovish. So that's it for the presentation, really. We're going to go ahead and jump into the stock market in TLT and take a look. Now, before we dive too deep into the analysis and get super technical, there's two things that I really want people to go over and start paying attention to is going to be the MACD. The MACD is really good for spotting an exit signal. It's not 100% guaranteed, but you can combine some strategies together to give yourself further confidence in your play. So the MACD is one thing we're going to look at. Specifically the exit signal, when this blue line crosses below the orange line, you typically see a large move to the downside afterwards in TLT, right? So it happens right here. We get a crossover over here. We get a crossover as well. We get another move to the downside over here. We get a crossover. We get a move to the downside. Over here, we got a crossover, we got to move to the downside. So, that's what we're looking at as a potential short signal. Remember, it's not guaranteed, but it is something that's been pretty effective as of here recently in the past year. The other thing is going to be your three major retracement levels, the 61.8, 50%, and 38.2. So when you see these sets of three yellow lines, that's what these are using the fib tool over here. Nothing moves in a straight line up or a straight line down. You get a move up, retracement, continuation higher, move down, retracement, continuation lower. This is how you spot trend continuation, okay? Now you can spot a reversal when you come up, come down, and then you break through those retracement levels. That's how you can spot a reversal to the downside, and you spot a reversal to the upside doing the same thing when you break through those retracement levels. So we haven't done that yet. For the past year, we've been coming down, retracing to retracement level, continue the trend, retrace to retracement level, continue the trend, retrace, continue the trend, retrace, continue the trend. And, currently, if we take a look at where we're at on TLT, we're doing exactly that. And we rejected our 109.72 major retracement level, the 61.8% level, okay, at 109.72. Now, we've really been hovering right around 106.33 here recently. As you can see, we go above it, below it, above it, below it, above it, below it, back above it. We've really been zigzagging here, and we're actually forming a little bit of some bull flag consolidation. All right, but the overall structure that we've been tracking on this has been a 5-wave structure to the downside. So I'll go ahead and just kind of explain this 5-wave structure so you guys understand it. It's going to be this larger orange line, our 5 waves. Now, wave 1, wave 3, and wave 5, those are going to be what's known as 5-wave impulsive moves. And then your wave 2 and your wave 4 are going to be ABC corrections. Now, we've been following this structure, so there's no reason to not still use it until we break this structure and, we have to look for a new structure. But as you can see here, we got a 1, 2, 3, 4, 5 on our original wave one. Then we got the ABC correction up. Then we got a 1, 2, 3, 4, 5 again. We got an ABC up, and we started our wave one down. We got our wave two bounce. But rather than just going straight back down for the wave three, we've started consolidating, right? So that's why we do have this bull flag consolidation right here as a possibility, right? Because we're going to keep both scenarios open that we could break out to the upside, or we could just be consolidating before getting our next wave three down, before an eventual wave four bounce up and wave five down. So, the main thing that I'm looking for, again, is going to be that TLT or that MACD sell signal, right? So over here, we got a sell signal on the MACD, and then look at what happened. We got a sharp move to the downside. Now, it also works for entry signals as well. Not only did we say that, hey, this is most likely the end of our wave one, and a lot of people closed some shorts here, or some people opened some long positions here, and were able to ride that momentum upwards. We also bounced off of the trend line, and we got a MACD buy signal where the blue line crossed above the orange line. So if we take a look and we try to zoom in just a little bit more on our MACD, it's pointing downwards, and it's very, very close to getting a MACD sell signal and getting the crossover. Remember, it's not a guarantee. If this thing does cross below, it could cross right back up above. So, you don't want to be fooled, but it is the signal that I'm looking for as a potential short, is to, if this thing collapses and starts trading below, then most likely we're going to continue this smaller five-wave structure to complete the much larger five-wave structure down. We're targeting anywhere from about 80 to 90 on TLT is going to be the price targets there. So that's one thing that I'm really looking at. The RSI, I don't see any divergences. I don't see a bullish or a bearish divergence currently at the moment. This is what I see, is that we have a bull flag. So, if you're waiting for a position, just continue waiting, right? You really want to see, are we going to break this trend line essentially right here and get a bull flag breakout to the upside? Or are we going to get a potential MACD sell signal and really start to complete this third wave down? There's two important gaps to the downside. We have a small gap to about 100.50, okay, and then we have another larger gap down to about 95.50, and then we have a small gap up to about 111.50 as well. So gaps tend to fill about 90% of the time. The big question is when they're going to fill, not if they're going to fill. So I love to have them charted up on my screens, so that way we can tell, hey, once we start moving closer towards this gap up, we can, really track it and say that, hey, it's being attracted to this gap right now. And as we start moving lower, we can see it's being attracted to the lower gaps. These gaps, they can take days to fill, they can take weeks to fill, or they can take months to fill. It really just depends, right? If you look right here, we had a small gap that filled within a couple days. This gap over here is all the way from September, and then our gap down is really from the middle of November. So, just goes to show that, we're just watching and we're just seeing what's really going to happen. The three important levels, okay, right now is our resistance level is 109.72. Our support level essentially is going to be 106.33. If you're bullish, you want to see this consolidate and stay above 106.73. And then we also have a support down here of 102.94. If you're bearish, you want to see these three levels flip to a resistance, and you want to see us start trading below those. That's going to push us closer to these two gaps down. And then we still have this trend line here as well to be very wary of. So if we do get the move down and potentially fill this gap, we need to be cautious of a bounce right here back along this trend line. If we break this trend line, then we really could, that would be a pretty bearish signal right there. Now, another thing to look out for is we have a double top forming. So if you take a look, we have a top here, we have a top here. We could be forming what's known as an M pattern, right? So here's the move up, here's the move down, the bounce, here's our double top, and then this would be the M, okay? So, there's a very good chance that we could be forming an M pattern, but really we're still consolidating in this bull flag structure right here. So if you're bearish, you want to see this, bull flag structure break down, okay? You want to see the M pattern really start to play out. You want to see a MACD sell signal. And if you're bullish, you want to see this blue line here on the MACD really curl back above and make some space in between the orange line here to show some good momentum. You want to see us break our 109.72 resistance level and come up and fill the gap up here. And then, you want to see just overall the breakout of the bull flag structure. So that's going to be it for today's video on TLT. Hopefully you enjoyed it. If you did, smash the like button, subscribe to the channel. I do want to mention that I do viewer requests every single week. So if you enjoy these type of technical analysis, I'll be happy to do some TAA on a bond for you, on a cryptocurrency, on a stock you guys want to look at. I've been covering natural gas a lot lately. Natural gas has been pretty popular. So just let me know in the comments below, and I'll be happy to make a video on it for you guys as soon as I can.